The global economy is on edge, and Japan finds itself at a critical crossroads. With the U.S. economy showing signs of weakness and trade tensions escalating, the Bank of Japan, BOJ, faces a daunting challenge. Should it maintain steady interest rates or risk further instability? As the BOJ concludes its two-day meeting on Friday, all eyes are on Governor Kazuo Ueda, whose decision could shape Japan's economic trajectory in the face of mounting uncertainties. But here's where it gets controversial. While some argue that raising rates is necessary to combat inflation, others fear that such a move could stifle Japan's fragile recovery, especially as U.S. tariffs continue to weigh on exports. And this is the part most people miss. The BOJ's decision isn't just about numbers. It's about balancing the risks of inflation, economic growth, and political pressures. The meeting comes hot on the heels of the U.S. Federal Reserve's decision to cut interest rates, a move aimed at bolstering a weakening labor market. For Japan, a downturn in U.S. growth could spell trouble, exacerbating the challenges posed by tariffs and casting doubt on the BOJ's rate hike plans. Exports, a cornerstone of Japan's economy, are already feeling the pinch, with automakers and other industries grappling with the fallout from Trump's trade policies. Markets are eagerly awaiting Ueda's post-meeting briefing for clues on the BOJ's next steps. Will the central bank resume rate hikes paused since January, or will it adopt a wait-and-see approach? Kei Fujimoto, senior economist at Sumi Trust, notes, "We expect the BOJ to raise rates by early next year, but the October decision remains uncertain. Policymakers must weigh the impact of tariffs on corporate earnings and wage growth, a delicate task in an economy already under strain." Adding to the complexity is Japan's political landscape. With Prime Minister Shigeru Ishiba stepping down and a leadership race underway, the BOJ's policy outlook is further clouded. Frontrunner Sanae Takaichi, a vocal critic of rate hikes, is set to unveil her campaign pledges, potentially influencing the central bank's decisions. Is it wise to raise rates in such a politically charged environment? Or should the BOJ prioritize economic stability over inflation concerns? Inflation, meanwhile, remains a wild card. Japan's core consumer prices rose 2.7% in August, exceeding the BOJ's 2% target for the third straight month. Hawkish board member Naoki Tamura has warned that the bank may need to act decisively if inflation risks escalate. Yet, with global uncertainties looming, the BOJ must tread carefully to avoid derailing the recovery. As the BOJ navigates this intricate web of challenges, one question lingers. Can Japan strike the right balance between growth and stability in an increasingly volatile world? What do you think? Is the BOJ making the right call, or should it take a bolder stance? Share your thoughts in the comments. Let's spark a debate.